Housing situation in Canada is getting worse as you need to have at least $1 million to buy a simple roof over your head. Surely this problem is not going anywhere unless housing availability and affordability comes back into picture. Hi, my name is Sunny and a quick like share alongside smashing that like button will be highly appreciated. The age old law of supply and demand that is applicable to consumer goods is also applicable to real estate in Canada. Experts believe we have become a nation of renters because owning your own place to live is getting difficult for a common man now. Surely there are multiple reasons contributing to this housing crisis we are facing, the main being high cost to buy it. Consequently, many would be home buyers just pull back for that reason. The housing price index, where 100 means stable price, stood at 128.9 for Canada in the month of January 23, indicating that homes are more expensive than average. Inflation has been a topic recently as this has eaten away purchasing power of Canadians. With a decrease in buying power of loonie, prospective home buyers will surely need more money to buy their dream home. Unfortunately, income levels have not been rising enough to meet rate of inflation. On top of it, our hot real estate market has made houses unaffordable for a common man. Also, cost for new construction has gone through the roof since supply chains got disrupted during pandemic which elevated cost for the builders. In nutshell, inflation is creating havoc with people's finances which is not helping the housing situation in Canada. Often during times of economic uncertainty, investors try to protect their wealth by investing in assets that hold their value over time. That is why wealthy investors have always used real estate as one of the most popular investment vehicles. Unfortunately, it resulted in housing shortage as increasing volume of real estate is held as investment for appreciation or rental returns than by homeowners who want to live and raise their families. I agree there's nothing wrong in real estate investing, but that has adversely affected an average Canadian who is not now able to afford it. Recently, the federal government is prohibiting non Canadians from purchasing residential properties so that speculative buyers are discouraged. Canada plans to open its doors to even more immigrants, but the government does not have a comprehensive housing solution for newcomers needed to fill jobs in this country. Housing affordability and availability are two key concerns for Canadians who are generally in favor of higher rate of immigration. Later survey showed this will have a positive economic impact as we have over 1 million job vacancies because of labor shortages. On the other hand, some Canadians have a valid concern like I can't even afford to own a rent or struggle to pay my mortgage and we are bringing more people into this country. Where are they going to live? An average household last year needed over 60% of their disposable income to cover costs related to housing. This figure is even worse if you live in Vancouver or Toronto, where it takes 90% to 80% respectively of your income that goes into housing related expenses. This unaffordability soared to new heights when home prices went through the roof during pandemic. Until last year, even smaller towns had a red hot real estate, which is a cause of major concern. As rates have started to go up recently, now higher mortgage costs need even deeper pockets to own property coast to coast, according to experts. The fact remains, household incomes are not keeping pace with home prices, which need to be checked, else we could have a huge correction in the future. After years of overheating, Canadian housing market has entered a crisis zone according to experts. Using macroeconomic and financial risk indicators, up to 16% of major economies have a 18 to 20% chance of suffering a housing crisis, that too within the next 3 to 5 years, whereas historic average is just 2%. Housing boom in these advanced economies were fueled by a long period of ultra low rates, where price on an average has gone up by about 50% in a short period of time. This valuation jump is not in sync with income growth and historically been linked to a bubble generation leading to a huge correction. If not checked in time, this bubble will pop, which is a matter of time. But that is me, I might be wrong. As a disclaimer, I'm not a financial advisor. Please consult one before investing based on your personal financial situation. If you like the content that I make, please help me and my channel by liking, sharing, and subscribing to it. Thanks for watching and see you in the next one.